Uber today reminds me a lot of Netflix. A decade ago, it was already a dominant company, but there was a ton of growth runway ahead. And I think the same is true for Uber. The stock looks expensive, trades for about 30 times earnings. And that's something to think about when there's a lot of competition in the industry. You have DoorDash, you have Lyft, and then obviously a lot of international players the company has to compete with. But the growth opportunity for Uber is huge. And it's not just about ride sharing, it's also about delivering food and other goods. They announced two interesting partnerships recently, one with Best Buy, another one with Dollar Tree. I want to dig into those and where the opportunity for growth is for Uber. I think the real competition for the company right now is not actually with Lyft on the mobility side. It's actually with DoorDash on the delivery side. That's where they could have the most potential for growth long term. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. If you want more from me, including every stock that I buy every month, go to asymmetric-investing.com. That's my newsletter where I'm building the asymmetric portfolio that has absolutely crushed the market. I do research on stocks there. I cover the strategies that are long-term winners for investors. There's a free option to get started if you want to start with that, and then a premium version, which gives you access to the asymmetric portfolio. So love to have you as part of that community. I do want to thank this video sponsor, Fiscal AI. Fiscal AI is something I'm going to be using throughout this video so you can see what the platform looks like. What you're going to see here today is the enterprise version, 20 years of data that you can pull. You can make phenomenal looking charts. But the best thing about Fiscal AI is their key performance indicators. This is going to show you everything you need to know about a company like Uber. What are their gross bookings? How many people are using the platforms? How much revenue are they generating from mobility versus something like delivery or even freight? They're actually got a really big freight business. So if you want to try out Fiscal AI, go to fiscal.ai/ASYM. That'll give you 2 weeks for free, and then you can get 15% off if you decide to become a paid user. That's something I am. And like I said, enterprise version is what you're going to see here, fiscal.ai/ASYM. And now let's dig into Uber, $200 billion market cap. So this is a very big company, and the price earnings multiple, a little bit misleading here. Let's look at the forward price earnings multiple is about 30, 29.4 as I'm recording today. The enterprise value to sales, 4.2. So not the cheapest stock when it comes to a tech stock, not super, super high margins yet from a net income basis, but those margins are improving. I'll get to some of these numbers. But just wanted to kind of frame the size of the company right now. If you compare that to its competitors, DoorDash, about half the size at $100 billion market cap, the enterprise value to sales is about double. So from a revenue perspective, Uber has about 4 times the revenue of DoorDash. Lyft, much smaller player. By the way, I own Uber and Lyft in the asymmetric portfolio. I think this is an opportunity because it's just so cheap. Enterprise value right now, $5.6 billion. Enterprise value to sales, not 4 or 8 like you have from Uber and DoorDash, just 0.9. But let's get to what makes Uber such a compelling business, and that's the network effects of the business. What I did here is I pulled the mobility revenue and delivery revenue, and let's do trailing 12-month numbers. And this is since the December 2022 quarter. So it kind of takes out some of the pandemic impact in 2020 and 2021. You can see the trends here are actually favoring the mobility business. The delivery business is actually something that kind of came out of nowhere late in the 2010s. That was a huge growth driver, but now you're starting to see much more in mobility, $27.1 billion in revenue over the past 12 months. The delivery business, which is Uber Eats, 14% compound annual growth rate, about half the growth rate of the mobility business. Now, this is interesting because these two things really work together. It's the same drivers, and this is a business that's really about supply. It's not so much about demand. Yes, you need to have people using your app, but to have people using your app, you have to have rides available, you have to have products available. So on the mobility side, when you open up the Uber app, you want to see that you can get a ride quickly and relatively inexpensively. That requires supply. Supply is what you have to really get started. On the Uber Eats side, the delivery side, you have to have partnerships with all kinds of restaurants and now all kinds of retail stores as well. If you have that, then you can bring the supply of drivers. So those drivers could be driving for Uber or for Uber Eats. It's basically Uber just wants to keep them busy. So once you get that supply flywheel going, that's how you gain power in the market. That is what Uber has absolutely done. That's why they have a bigger business than Lyft, for example. But where the threat is with DoorDash. If you look at DoorDash's numbers, this is DoorDash revenue in kind of this orange color here, and then their net income in blue. You can see they're now profitable, just like Uber, just like Lyft. So these companies have all increased their take rate, or the percentage of revenue that they're generating from each delivery or each ride, so that they're now profitable. But look at this compound annual growth rate. That was a 14% compound annual growth rate for Uber delivery but a 27% compound annual growth rate for DoorDash, for $11.9 billion in revenue, nearly as big as Uber Eats or the Uber delivery business today. So that's what I'm talking about. That is the threat. DoorDash is really starting to take market share in delivery. Now, that could be something that just impacts their delivery business. But remember, if you're Uber, you need to have both of these things work. And the real tie for them to keep them tied together and keep drivers or vehicles busy is going to be on autonomy. I'm going to get to that in just a second. But let's get to some of their recent partnerships and where they could expand this delivery business. They announced this week that they're going to be partnering with Best Buy to deliver tech and electronics nationwide. This is something that's already available on the Uber Eats app. Now, this is a pretty big name partnership. What you don't see in this is that Uber is going to be delivering items that are purchased through Best Buy. That's, I think, the thing they need to do. If you look at getting a delivery from Chipotle, for example, you can do that on the Chipotle app, but it's actually DoorDash that delivers that. They basically white label themselves. So I think Uber should be doing more of that because it doesn't really matter who's paying the bill. It doesn't matter that they're necessarily going to the Uber Eats app or even the Uber app, as long as they're using Uber's services. Same thing was announced with Dollar Tree. So again, another pretty big retailer where they're going to bring everything from groceries to party items to customers and bring them right to your door. But again, it's going to involve going to the Uber Eats app. Go to grocery retailer convenience, search for Dollar Tree, and then add the items you want. Just the way that you're going to order with a lot of other companies. But again, DoorDash is really, I would argue, the leader here. So while I'm talking about DoorDash as a threat, I think that really shows the opportunity. DoorDash is growing extremely quickly. If Uber can even just catch up and maintain kind of a 50-50 market share with DoorDash, that could mean that this is a massive growth business and it's already a pretty significant chunk of Uber's business today. But the real opportunity is not just bringing in new retailers like Best Buy, like Dollar Tree. The opportunity is making those deliveries easier, more convenient, and less expensive. That's going to be done with autonomy. This is a presentation that Uber gave earlier this year to investors, but it still really holds. A lot of the partnerships that they kind of alluded to have already been announced, but you can see that they see a $1 trillion opportunity for autonomous vehicles in the US alone. So you started with Uber XL. That was when Uber was just black cars, and you have Comfort, UberX, UberX Share. Now we're getting to shuttles, moving to replacing personal vehicles. This is all done with autonomy. That's if you can get to a ride being less than $1 per mile. Think about that, taking a ride 10 miles away and that ride only costing you $10 rather than the maybe $20, $30, $40 that it costs today. They're going to be doing that by bringing a ton of supply to the market. And Uber's strategy here is really to make all of these suppliers essentially commodities. Yes, they're working with Waymo. That's one of their partners that they have in a couple of cities in the US, but they're bringing Neuro's technology to market with Lucid. They're working with Mobileye and Volkswagen. May Mobility is another one. Baidu. What Uber would love to see is all these companies be successful in getting fully autonomous vehicles on the road. That answers kind of the mobility question. But I think the next step when we come to deliveries, not only delivering food, but delivering the electronics you might get from Best Buy, delivering your groceries to your door, is robotics. I don't think we're that far from having an autonomous vehicle that just simply has a robot that is going to deliver your order from the vehicle to your front door. Maybe it isn't going to be available everywhere, but think about this as something that would roll out in suburban areas first, where the robot could just walk to your door, set your food or your items on your doorstep. That eliminates the need for the human to be involved at all. The retailer, the restaurant can simply go put these products in the Uber autonomous vehicle to get it delivered. And then it comes to your door. Nobody even needs to be involved from a delivery side of things. That's ultimately the goal for Uber, is to be able to reduce those costs so much and take the human out of it. And what they can do by having mobility and these delivery services, this is really the reason that adding more and more of these deliveries is more important, is keeping these autonomous vehicles and potentially robots busy as much as you can out of 24 hours a day is going to be really critical to making them economically viable. If you're only operating them 3-4 hours a day that you are maybe with a human driver, that's not going to be economically viable, especially if these vehicles are going to be $100,000 a piece. Maybe a robot is going to be the same. But if they're able to drive around and do deliveries 22, 23 hours a day, then suddenly the economics really start to make sense. I think that's the ultimate goal for Uber. That's the 10x opportunity, the asymmetric opportunity over the next 10 years, is not just to have the business that they have today, but expand upon that and make that business even bigger, bring more supply into the market, not only on a transportation side with autonomous vehicles, potentially robotics, but also with all kinds of suppliers as well. I started this with saying that Uber reminds me of Netflix. Netflix was a dominant streaming company a decade ago. It was very clear they had won, but was it a buy? Yes, it was, because there was still an opportunity to add hundreds of millions of subscribers and increase the revenue that you're generating from each of those subscribers. Same thing is going to be the case for Uber over the next decade. This is one of the reasons it's a stock in the asymmetric portfolio, probably one that I'm going to add again before the end of 2025. But let me know what you think of Uber's opportunity. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing, not only here, but also my newsletter, and check out fiscal.ai/ASYM. Thanks for watching, everybody. See you here next time.